Investors are largely on hold leading into Fed and mega cap earnings. We basically the market map overnight. Obviously you saw most of the regular names go higher. Your Nvidias, your Broadcom, Microsoft, Amazon, etc. Few over here in the industrial space as well. But it was a fairly mixed night, if I'm brutally honest. Those with momentum went higher. Those without momentum tended to go lower. United Health was down 19% on changes to Medicare. This here. So the woes continue there. And basically but we're essentially in for, we're in some form of holding pattern basically until we get the Fed tomorrow morning, in particular. And there was a couple of earnings. American Airlines was down 6.5%. They beat on forecasted profit. But they've had some strong demand for high margin services, but then ended the day down about 6.5%. General Motors, high fourth quarter. Stronger sales of its affordable crossover SUVs and pickups was up 9%, and UPS was up 1%. Just on increased business, with Amazon and their deliveries overall. So we had the Dow was up a little bit, weighed down by United Health, which is in that index. S&P was up 0.5%, Nasdaq was up a little bit, and obviously the Russell was down 0.35%. First time that's kind of happened in a while. The Aussie was up a little bit yesterday, but it's up about 0.4%, and around the 89. Around the 89.37 mark in the SPY. I would expect it to continue higher. We had a late rally in gold and silver, particularly, and platinum. Precious metals were getting pretty hammered at one stage. And these are just, because we're having such a massively volatile period in gold and silver, when I downloaded our end of day, or sort of our prices for this bar chart, it was significantly lower than what the settlement price was. But we got to 117.80 or something in silver. We came all the way back down to 103, which is probably about when I downloaded these prices. And then it's gone all the way back up to 112, 113, hovered around 107 all night, essentially. And then platinum was down like 12% at one stage. Gold was down 1%. And then in the last hour of trading today, basically we saw gold lift to up 1.5%. Silver went back to 112, around that 113. Platinum recovered about 5% as well, as did palladium. We've that blow off top sort of still maintained. It didn't make a new high. There are rumours around from Bloomberg. It wasn't a rumour, but the head of precious metals trading at Goldman Sachs has been walked. So I would imagine, if you can put two and two together, and I'm speculating here, that pretty horrible blow off top where someone was obviously getting stopped out on a short could very well have been one of the bigger investment banks around, because you don't quit that job, and there's only one reason you ever get walked. So and that happens to coincide pretty well with that blow off top in silver. So still really high volatility in those precious metals. For the first time basically in nearly 2 years, we're not holding any silver in terms of physical and spot. Because that was around this 110 to 115 mark is the equal to the 2008 to 2011 rally, which was, when we, even 3 months ago was a unicorn price target. And once we got there on the remainder of what we had, because we've been trimming along the way, we're out and we're starting to have a look at those silver miners now. and also looking a little bit at platinum as well. I think, copper's been sort of drifting back and forth, but not really getting any headlines just because of these precious metals. Iron ore as well, just drifting around. Lithium quietening. Uranium up 5% overnight. I think these critical minerals and these energy stocks are going to continue to attract money from the likes of Trump and the Department of Energy and the Pentagon, etc. We'll be and probably very much focused on domestic refining, because that's where their significant weakness is. It's not necessarily getting the lithium, the rare earths, or the copper, etc. But it's more the smelting, refining, etc. into battery grade, which is the hard part. So, US dollar continuing to drop. I think we're looking at a US dollar for the week. Dollar yen's down nearly 4%, which is a massive move. In terms of dollar index, we're down back around 96. Not surprising at all. And there's a little bit of chatter as well. There's a few bulls starting to emerge in Bitcoin again for the first time in quite a while. My condolences to the Bitcoin crew who picked the dollar devaluation, but unfortunately didn't get to reap the benefits like the precious metals guys did. But I'm sure your day will come. So risks, with this, our little risk check off here, basically, that I'm just going to continue to do. Japanese bond yields, and there's yen intervention talk, etc., etc. US dollar yen down 3.74 for the week. That is sort of intensifying. US government shutdown vote, well, it comes to a head in 3 days. The poly market's now got it at 81%. But we've had really no updates on no updates on Venezuela, no real updates on Trump and Powell. Spat, but it's Powell's first opportunity because they have a media blackout before the FOMC decision. It'll be his first chance to have a shot at the administration tomorrow in the press conference, and we haven't heard any more out of the Supreme Court on the legality of the tariffs or the Fed appointments, etc. These ICE agent shootings in Minnesota, etc. as well. I don't know how that really reflects on markets, just apart from, just general being on edge. I think that's actually really causing, driving a wedge with the government shutdown vote, and the likes of Chuck Schumer really trying to, push their agendas, leading into that, using this, these as examples around a bunch of other issues, as if they didn't have enough issues to deal with. Trump obviously saying he's massively reducing Medicare or Medicaid or whatever it's called over there, which has been belting United Health. That was one of the big that doesn't surprise me because it's Trump 101. He's essentially gone and threatened that because where they had a sticking point with the government shutdown, and they only really just kicked it down the road because they didn't want the US airspace to be shut down because they weren't paying the air traffic controllers on Thanksgiving. So this is just, nothing was resolved, and the sticking points were healthcare on that point. So Trump coming in and going and essentially, making that announcement that's absolutely pummeled United Health, will be a forward. It's a negotiating tactic. There'll be some form of taco as the government shutdown gets resolved, but whether it gets resolved in time, whether it gets whether it's another stretched out thing, but I don't think either party wants a shutdown leading into midterms. However, they do tend to drag these things out till the last minute, do it over the weekend. 31st is the date, which is obviously, which is a Saturday. So, and that's when they sort of run out of money to be able to pay people. So they've got to solve it. They've got to solve it by then, essentially. So you'll have a bunch of really annoyed public servants and soldiers if they have to go through this for a second time in 3 or 4 months. So, but you know what? The politicians, strangely enough, they're not cut off. So we'll, yeah. So I think that'd be probably the easiest way to solve that situation would be that Congress also gets cut off. But you know, that's never going to happen, obviously. So yeah, tomorrow night this time tomorrow morning, we're going to have results from Microsoft, IBM, Tesla, and then we've got Apple, Caterpillar, the oil companies later in the week. Thursday morning's FOMC. So we are still kind of in, I'm still favouring cash. We're taking profits in precious metals, starting to look at a little bit in the Aussie tech market, which we're seeing some opportunities there. But I think that there's a lot going on over the course of the next week or so. So I think having that cash spare and not scrambling in case something does actually, put a hole in this rally, or if any of these mega cap stocks don't report well, I think we'll have a I think that cash will be quite valuable to buy the dip, because Trump did say overnight he doesn't really care where the US dollar goes, which, I mean, realistically, global sovereign funds are massive holders of US stocks, and if US dollar's down, it makes it cheaper for them to buy. They are great companies. So, just because the US dollar and the US is a basket case doesn't mean they are. And there is a huge likelihood that once Trump gets control of the Fed in May and stacks it with his stooges, money's going to get printed. So, that's going to be good for the stock market as well. As I've said on a couple of occasions, you probably just don't want to hold it in US dollars. So if you want to know more, you've got until Saturday basically to get your 1 month free trial with all of our recommendation services. And then the trial ends. But if you want to follow us on a bit of our content for our podcast and things like that, in this morning, the morning call, at MPC Markets, Spotify, YouTube podcasts, but just go to mpcmarkets.com.au/mosaic or mosaic.mpcmarkets.com.au, and you can sign up there and get your 1 month free trial. You get ASX sort of shorter term recommendations, Jonathan Takadina's service, which has been going very well. US short-term recommendation service, which Richard Nader and Finjit Earl run, and high conviction stuff from myself and Kai, ETF portfolio, structured investments, 3 podcasts, bunch of content, education. And then it all gets, timely recommendations get pushed by notification to your phone, so you don't miss out. If you're not in front of your terminal or you're at work. So it works pretty well. So hope everyone has a great day.